rating. This wasn't an unsolicited rating. It wasn't like Moody's was there and then decided that it was just going to rate Ghana and cause problems for us. We went to Moody's, paid money, and asked Moody's to give us a rating for specific securities that we had sold. One of the interesting things about the current debt market is not only, when you take a normal loan, like a loan to build a dam, it's often hard for you, that loan, the person that's giving that loan, to sell it on to somebody else. Often they will need another counterparty to securitize it or something like that. But for these types of loans that we go out and borrow through the bonds, when you buy them, you can sell them. You can sell them on the secondary market. So there are a lot of ways in which, for that reason, you can use other metrics instead of the credit ratings to determine whether or not a country is credit worthy, because their bonds are traded in liquid markets. However, it helps when the government itself is trying to determine where they are to get a rating, because it helps investors, and they will normally be the ones that will pay for it. And most other people will then consume it for free. So we should be careful we don't make it look like, Moody's was roaming around looking for some African country to bully, and they went and issued some rating. The other thing is, yes, some of the ratings could differ, and we've seen some variation now between among the three rating agencies as far as Ghana is concerned. Perhaps a notch different variation among them. And that is because sometimes the ratings are not actually capturing the same thing. So if you take the most critical factor, which is the one that you pointed out, the risk of default, you will find out that Moody's does not only consider the probability of default, they also consider whether or not, if the default happens, if we don't pay, how severe would that be from a systemic risk point of view, or from other factorial points that are critical for investors that are looking at that analysis. I read the government's response, very robust. I won't say unprecedented, because in the over the last couple of years, countries have tended to argue about credit rating agencies and the impact on the economy. But it's a bit unprecedented in the way that the government went about making its case, going after specific rating analysts and suggesting that those rating analysts don't know enough about their work and they don't know enough about Ghana and the rest of it. That was quite unprecedented. A couple of points. One is, usually when we criticize rating agencies, we actually criticize them for being too optimistic, for keeping rates high when in fact they should be downgrading. So a lot of the subprime credit issues where they got their biggest beating, and a lot of efforts that were made to introduce regulations for ratings agencies, was not because they were downgrading they were too trigger happy in downgrading. It was because people felt that a lot of these so-called collateralized debt obligations and the rest that have been tranched, and then for all of a sudden, because of the engineering, fairly subprime components create something that was regarded as prime. And so it's actually the fact that we often criticize them for being too optimistic that there's call for ratings regulation. So for Ghana to suggest that being downgraded is somewhat arbitrary is a bit surprising. Secondly, and that is an important fact, when the ratings are being undertaken, you don't have just one person, the lead analyst, make the decision. They will make a recommendation with their team after they've spoken to the country, the principal, and all of that. But thereafter, there's a vote at the committee level. And that committee will normally have analysts that are very senior, including some that are very familiar with Ghana. And it's not as if the lead or the primary analyst that is assigned to Ghana is only doing Ghana. Typically, they do multiple countries. So this tendency to make it look like there was one specific person that was out to get us, I think it's a bit unfortunate, given the way that normally the ratings we put together, including the vote, etc. Secondly, Ghana had an opportunity to appeal, as Ghana itself says, and that appeal was not to the rating analyst. That appeal was to the committee. And it's after the committee had looked into it carefully and looked at the evidence that was presented in the recommendation that they decided not to grant Ghana's position. The other question is whether, discretion is allowed at all, because there was a spot in Ghana's response where it questions the fact that certain arguments were made without quantitative backing. But every ratings exercise include both quantitative and qualitative, because you do need analytical judgment. There are instances where something that is on the rating scorecard, and yes, you need to adjust it because of other factors. For instance, if you compare it to a lot of our peers in Africa, our economy is quite strong. We have a big GDP, and we grow quite well. So typically, you expect that the 35% weighting in that segment, in the financial strength segment, etc., you get a full figure. You don't get a full figure though when you have other factors are important. One of the factors in our case was diversity of the economy. So when you have a situation where, for instance, other not directly imputed metrics in the scorecard are important. You need analytical judgment. Somebody has to make a call, and that is also important.